My guests today are Dr. Matthew Brigida and Staci Warden. These guys are from the Algorand Foundation, and we'll learn a little bit more today about why they're on the show. But to begin with, let's just have some brief introductions from you both. Matt, shall we begin with you? Just love to hear a little bit of your personal and professional backstory. What have you been doing in the lead up to joining the team at the Algorand Foundation?
Oh, thank you, Andy. I'm presently a professor of finance at SUNY Polytechnic Institute, and I'm also chief economist at the Algorand Foundation. I've held an academic rank for about 15 years now. And in the past, I've industry experience in banking and energy trading and production.
Very good. Staci?
Matt also has the brain the size of a small planet. I've known him for a long time, and he is very good finance econometrician, and we were quite lucky to have him come to Algorand because he's quite interested in crypto as well. I am the CEO of the Algorand Foundation, and Algorand is a next generation layer 1 protocol with instant finality and a very high transaction throughput. So, it has some things that it had alone for a while that other blockchains have caught up on, like low fees, very low environmental footprint. But right now, I would say the unique thing about Algorand is that it has instant finality and very high throughput. I came also from traditional finance, and I'm very happy to be here.
Yes, indeed. Thank you, Staci. Well, the reason that Matt and Staci are on the show today, well, of course, to talk about Algorand and the good work that the foundation is doing. But Matt, you published, I believe, just maybe a week ago, a paper. The paper is called "The Surprising Irrelevance of Total Value Locked on Cryptocurrency Returns." So, of course, what we understand as TVL, which is a metric that has been extremely popular and prevalent throughout DeFi. But yeah, your paper makes the surprising case that TVL is, in fact, irrelevant. So we'll talk a bit about this today. I guess any way you want to start here, Matt, in terms of why, the background to the paper and what inspired you to look at this.
Well, just absolutely. Thank you, Andy. The importance of how prominent the metric is, out there. It's often cited. So we really wanted to get down and say, okay, well, does this metric provide anything, any information beyond what other metrics will provide? So the methodology that we use here is a standard testing framework within empirical finance. And we sit there and say, okay, if TVL is really telling us something unique, then we should be able to construct portfolios based on that TVL, and then earn alpha. The idea is we should be able to earn some returns that aren't just attributable to overall crypto market returns. So the idea of the paper is TVL is a prominent metric, and some other articles have started to question it. So we wanted to say, okay, well, find some evidence in favor of some of the articles that are questioning it, and really kind of put a strong empirical test to see if it is really relevant to cryptocurrency returns.
And one of the ways that you, you conducted an experiment. So just explain the experiment, because it's quite interesting. And look, anyone who's a crypto asset investor or trader will kind of understand what you've done here. But yeah, just run us through exactly what you did in terms of that experiment, Matt.
Start, Matt, with the data set that you put together too. I think is quite interesting.
Yeah. Okay. Yeah. Absolutely. So we put together a data set of over 300 cryptocurrencies, and then and looking over 2003, 2004, because we need to construct portfolios, so we need good enough data on TVL. So the methodology here is to sit there and say, okay, if TVL is providing some unique information to the market, if in other words, a unique factor, then we should be able to construct portfolios based on that to earn alpha. So what we did was we fundamentally created a portfolio that we rebalance every week. So the idea is I looked last week and I rank all the portfolios by TVL. And then I buy the top 25% of cryptocurrencies with the highest 25% TVL and short the ones with the 25% lowest TVL. So this is our high minus low portfolio. And then we look at that return over the next week. Right. And then next week we rebalance given the new ranking of TVL and so forth. So this is it's a trading strategy that a fund may use, right? So we constructed this trading strategy, and then we fundamentally test whether these returns are generate any alpha. Do they generate any returns that aren't just simply something that can be replicated through trading and other crypto factors like the crypto market. I should mention we also, in addition to the high minus low, meaning buy high TVL portfolio and short the low TVL portfolio, we also look at quartile portfolios. So this means borrow at the risk-free rate and buy the first quartile, second quartile, third quartile, fourth quartile. So roughly the methodology is construct these portfolios, and then look at the average return on these portfolios over the sample period and see if any of these portfolios have a significant return. This could be a positive or negative significant return. It doesn't matter. We just want to see if any of them have a significant return. And of those portfolios that do have a significant return, we then run a crypto market model and a crypto three-factor model against it. So what a crypto market model is you might be familiar with the CAPM. So the idea is we regress the returns on these portfolios against the market. And across all the portfolios, the market returns explain the returns on the TVL portfolio. So what this means is that alpha, that intercept is zero. Another way of saying it is that you can replicate these TVL portfolios by just trading an appropriate amount of the market, meaning maybe borrowing a little and buying the market. So if you can just replicate it through trading the market, TVL is not providing anything unique. Right?
Yeah.
And yeah, so I mean, what you're trying to do always is you're trying to beat the market, right? And so so Matt found, so he took all of the, you take a chain, for example, and you say, what is the total TVL on that chain? You have to normalize it by the market cap of that chain so that everything has the same denominator. So you can compare, apples to apples on the thing. And then you say to yourself, okay, well, what if going back in time, looking at that old data, so you're testing it against returns that so he's going back and testing it over time. If I had this portfolio, and I have to be hedged. So if I buy the top 25%, I need to short the bottom 25%. If I was hedged, if I had done that, would I have beaten the market? And he wouldn't have beaten the market by doing that strategy. Somebody else could have used, as he said, another kind of strategy, borrowing, using leverage, we call it. So it kind of was surprisingly irrelevant, as the paper said.
Yeah. So effectively, you're saying that TVL, the metric TVL, suggests how many assets are indeed locked or sitting in a protocol, but what you've discovered is that it doesn't tell you whether that token is going to outperform the market, and of course that's the alpha that everyone is always looking for. So I guess we should talk a little bit about the implications of this. So as you've discovered, there could be billions locked on a chain in a dApp or something, but it doesn't mean that the token behind that is going to be, a token that is worth investing in the hope of beating the market. So what are the implications here if TVL is not necessarily a reliable investment metric?
And so absolutely. And thank you, Staci, for mentioning we do use TVL divided by market cap scaled, and we also use change in TVL to market cap. So now, Andy, to the implication. So there's a couple implications, right? One, first and foremost, if you're a crypto investor, don't form portfolios based on TVL, right? It's so the analog to the stock market is like similar methodologies showed that you shouldn't form portfolios using the PE ratio, right? So what we're saying here for an investor standpoint is TVL, just like the price earnings ratio for a stock, might be interesting. There's nothing wrong with quoting it, looking at it, but don't foreign portfolios on it. It is not related to the cryptocurrency's return. Then also for other crypto market participants, this I hopefully spurs research in other measures. So TVL is trying to measure sort of the belief in a protocol and a cryptocurrency, how much we trust. There's TVL is trying to measure these aspects of a cryptocurrency. So what we're saying here is we need better measures. So can we improve upon TVL? Can we use a different metric? Should we look at wallet level activity? So the implications are really in terms of, one, don't form portfolios on it. It's not related to the cryptocurrency returns. And two, it would be great if researchers started to look for better measures.
I mean, I'll give you an example from Algorand. And I have my Folks Finance t-shirt on so that Folks is our biggest DeFi protocol, so he doesn't think that I don't care about TVL. But before we had good staking mechanisms, so now it's quite easy to stake on Algorand. You had to stake through a liquid token through Folks Finance. And so then we built a, one-click node ability with all you need is 30,000 algo to stake and secure the network. Our network security, the algo staked, has almost doubled. So we're at 1.8 billion algo staked in the network. But that has come at the expense of TVL and Folks Finance very directly. And so you can see that we have, by securing our network and making it easier to do that, we have actually improved our network enormously, improved our ecosystem enormously, brought in new participants into our ecosystem for the first time. Lots of people just coming to Algorand for the first time, sometimes through exchanges and sometimes directly. But the overall TVL in the ecosystem has gone down because of those positive things. So just intuitively, it can't be explaining everything, right? Even in our case, we saw that quite directly.
Yeah, one of the problems, I think this speaks to one of the problems or the kind of the traps that especially new people that come to the crypto market, and sometimes new people come in and they expect outsized returns, and perhaps they think, well, I've missed the boat on Bitcoin or, one of the top 10 coins. So they think, well, maybe I can beat the market by going, putting an outsized proportion of my capital in one of the other smaller altcoins or tokens, or even something that, a chain with a high TVL. But it turns out it's actually very hard to beat Bitcoin, and it's not necessarily a smart strategy to go all in on one asset in the hope of beating the market, is it?
Well, don't tell me that, because, my pension is all in algos right now. So I really hope no. But, we also see this at the foundation, right? We try all kinds of things and, get all kinds of partnerships and have all kinds of marketing and do all kinds of activities, right? In terms of bringing developers on, bringing small companies on, nurturing these small companies, et cetera, et cetera. And what matters the most is how is Bitcoin doing, really, right? And so it's like you're in this kind of peloton with Bitcoin leading the way. It's very, I don't know, Matt, if you've done any kind of independent research on that, but that's definitely something to look at. Just the extent to which Bitcoin drives returns across the sector. Yeah. Of course, Bitcoin doesn't really have TVL, so it's a separate, and you excluded, I think it's important to say, Bitcoin from your analysis in your paper. Yeah.
Correct. Absolutely. But we exclude Bitcoin and stablecoins.
Yeah, and stablecoins, of course. So it's hard to drive price appreciation in stablecoin. Yeah.
Because one of the other, points that you found, Matt, is that, it's possible for various players or devs, chains, and so on to effectively manipulate the TVL metric, right? Which is, quite an important distinction to make.
Yes, absolutely, Andy. In our analysis, we use multiple measures of TVL. So we use the total TVL simply because it's widely reported, and then we use TVL measures that will remove double counting, and then
double counting. Explain that. Yeah, what is double counting exactly? How does that show up?
Kind of a classic example of double counting is when you wrap a cryptocurrency. So your cryptocurrency is deposited into a smart contract, and then it issues a wrapped version of that cryptocurrency, and then so that gets counted twice across two different protocols. That's leveraging will also do it, but wrapping is sort of the classic example of double counting. But the idea is we know that we shouldn't be counting this dollar value of this asset across multiple chains here being double counted. And top level TVL still does that, right? But we know it's a problem. So you'll see TVL measures which exclude that double counting, and then exclude other methods by which TVL could be inflated, lesser methods. And so we did that analysis across all of these and found the same results. But this actively shows that people know, market participants know that, okay, well, intuitively we need a better measure. And sort of what we did was say, along the lines of agreeing with those market participants, is saying we've empirically shown that we need another measure, and that none of the ones that we have suffice.
Yep. All right. Well, look, just to finish up this part of the conversation, because it'd be useful also just to learn a bit more about what you guys are working on at the foundation for Algorand at the moment. But let's just I guess close out this part of the discussion. Any way that you would like to do that is fine by me, Matt. But maybe just touch on again what the conclusions are from your paper, and perhaps where the industry goes from here in terms of those next steps, just to have maybe a better idea of more reliable metrics that can be developed and used going forward for various industry participants. And also, of course, listeners, I will put a link in the show notes to Matt's paper itself, the PDF, and also just there's a great couple of some good blog posts on the Algorand website that digest the paper in easy blog format. So I'll put those in as well. But Matt, just close out this part of the discussion any way you want, please.
I suggest the blogs, everybody.
Yes,
I suggest the blogs.
So do I.
So absolutely. So the idea in this analysis, like Staci mentioned, we formed these portfolios on TVL to market cap and the change in TVL to market cap. And the great thing about the methodology we used, and we show that those portfolios don't have any abnormal returns. So what's a great thing about this methodology, this is a tried and true methodology in finance literature. But what's great about it is we can easily incorporate feedback from the community. So once, these blog posts came out, we got some feedback saying, well, maybe if you use TVL and wallet activity in conjunction together, TVL and some metric related to addresses, then that might generate some abnormal returns. So we got this feedback from the community, and then we can go ahead and test it. We multi-sort portfolios on TVL and, let's say, change in wallet addresses or change in activity, and see if those. And so that's one of the things we're doing right now is these multiple portfolios and seeing if we can generate alpha that way. So kind of closing this out, I'd say if anyone out there is sitting there saying, well, I think using TVL alone, we showed that's not going to generate abnormal returns. But if you have ideas in terms of, well, TVL and some other metric, feel free to shoot me an email and we can go ahead and test those portfolios. We're doing that now. And then see, well, if we can generate alpha in that way. And then, so where we're going with this research, we have other research going on, but where we're going with this is incorporating other metrics. And I think that's what researchers, builders out there are doing is sitting there saying, okay, let's try to find some other metrics. And I always go to sort of like wallet activity and things like that. But yeah, so that's kind of where we're going, and any feedback, we can always incorporate it. So don't hesitate to share it with us.
I mean, and you have spent some time, constructing this data set, cleaning up this data, making this data sort of the way that you like it. And so now it's a bit easier to do different variations of the thing. And now the risk, of course, is that, when Matt does find something that generates alpha, he's going to leave the Algorand Foundation, leave his teaching job, and start a little hedge fund in his garage without telling anybody else. The results that he found, because finding something that really does generate alpha is quickly arbitraged away.
Indeed. Well, I'll give you my email at the end of the show, Matt, and let me know when when you discover something. All right.
Right.
Thank you. Look, let's touch base just quickly on Algorand, and I'd love to just understand a little bit from both of your perspectives in terms of let's talk about where the wider industry is at, where Web3 is at, and where you see Algorand as fitting into that at the moment. Just any way you want to kind of start that off, Staci. Just you kind of gave us the high level overview of Algorand at the beginning, but let's do that again, and what your role is with the foundation.
Yeah, when I think about our strategic planning and the OKRs that we set for 2025, and so our goal is to be top 25 at the end of 25. So that's and we have 10 metrics that we try to use to get there. Those are very activity-based kind of metrics, right? So how many developers are we going to bring into our various developer activities, get them developing on Algorand? How are we going to, get the electric capital numbers up, around developers? How are we going to, what is the value on chain that is transacting? How many wallets, how many active wallets, how many active users, and by a metric that is a little bit, a higher bar than just one transaction per month, right? How are we going to how many startups are we going to get through our startup programs? How many of those are going to be funding ready? How many of those are going to get funding? These are real economic activity indicators. A TVL is important, but when you think about, just trying to grow an ecosystem and what is our share of voice, that you're trying to get sort of Planet Algorand as a whole to be bigger, then it's just one metric among many. So those are the kinds of things that we're quite focused on. What brought us to this space now where we spend some time, and I would say more time than many chains, looking out of the crypto bubble, the crypto, more broadly speaking, ecosystem. We had to lay a lot of groundwork to do that. So we have a fully Python developer environment, for example. So, it's not a version of Python, it's Python. And so there's 10 million people that code in Python. You don't have to go after Solidity developers necessarily, go after those Python developers. But we also have TypeScript now. We have a good kind of developer environment around that. So that was a couple of years and, several $1 million in the making, right? Now we think about, and because we have this USP, of instant finality, not a couple of milliseconds later, not the chain doesn't fork it, it can stall if things go wrong, but it doesn't fork. You never know when you make a transaction whether it will be picked up in the ether later and dropped or not, right? You just don't have that. That's quite good for developers as well, right? Because you don't have to build code for that contingency scenario. You can build code automatically, assuming that your transaction is going to go through. When you think about what those kinds of use cases that demand that, where it's not a nice to have, or it's a demand to have, it's going to be around payments, right? Where things have to happen instantly, where you have to have high throughput. So we're focused, it's a chain, anybody can build anything they like on it, but we tend to be pretty focused in areas of payments, real world asset development, payments in difficult areas around humanitarian payments, disaster relief payments, that kind of thing. And a real world asset around prop tech and other kinds of things like that. We tend to be a bit more like that as a chain, rather than some of the other, like a meme coin type stuff. We have our meme coins. I love our meme coins. Don't get mad at me, meme coin folks. But we tend to gravitate towards those kinds of, for example, we had a big advertising campaign this year around, can a blockchain do that? And trying to target people that are like, what's a block? What's crypto? I don't understand. It's all scam. I have no idea what it is. And Sam Bankman-Fried, wasn't he? My aunt said to me, are you still in crypto? I thought that guy went to jail, right?
Yeah.
Like, I mean, and so getting all of those people in is really what we think of as job one, where the real juice can be for us.
Yeah, look, that's very well said, Staci. And look, I know it was a little bit of time ago, but just your staking rewards now available on Algorand, and people can stake their algo.
100%, yeah. And our staking rewards program is much better than anybody else's, if I do say
Of
so
course.
myself. So there's not so there's no slashing, right? It's not delegated staking. It's and it's paid immediately, so you don't have to wait till the end of an epoch. As soon as the block is done, then you get your staking rewards, and the foundation, you get a portion of the transaction fee, and the foundation subsidizes that with additional algos. And so and then when the foundation, we have a very low, much lower stake percentage of the total stake now, but when we win stake, we put it back in the pot. So you absolutely earn staking rewards on Algorand.
And one of the things that I thought was interesting, just looking at the Algorand website, because it's becoming a talking point in, I guess, in crypto, the idea of the eventual future threat from quantum computing. And so you're already describing Algorand as post-quantum ready, whatever that means exactly. Maybe you guys can explain. But yeah, as I guess two parts to this, just anything you kind of think about in terms of, is the quantum threat is it a mirage? Is it a real threat? And can we really be quantum ready at the moment?
So I don't like loose talk around this. Neither does our cryptographers, our CTO. So the history of our chain is now quantum secure. It uses Falcon keys based on a very important paper that won a big national award for quantum security. And so it uses this Falcon key. So that means that every 12 minutes or so, it takes another picture of the history of the chain that cannot be hacked by quantum computers. That's very important, right? So that transaction history cannot be altered by quantum computers. And we think that is a very important step. Now, there are other steps, though, to having a fully quantum secure chain. So are your wallets quantum secure? Is your VRF quantum secure? And we have, when I say we, I don't mean me specifically, but we, the brainiacs at Algorand have thought quite deeply about how to do that. And I think we have, it's fair to say, good ideas in all of these areas, but engineering those ideas and executing those ideas is a question of priorities and resources and who is going to do what. So we haven't executed on those yet. But when you think of delivering on quantum security and delivering on privacy, those are the two, I would say, sort of next level things and then the third one would be obfuscating the whole idea of a blockchain for the general public. So for me, the big three really are quantum security, privacy on chain for when you need it, and then making, the normies not have to know that they're in a blockchain solution. I think those are the things we have to deliver on.
Absolutely. All right. Look, let's finish up this part of the podcast then, Staci. Please do that by just, for anyone interested in learning more about Algorand as, a blockchain, whether they're a developer or a normie just looking to dip their toes. And of course, also the foundation. Just tell people what they should do to keep up to date with what you guys are doing.
Yeah, sure. Follow Algo Foundation on Twitter. You can follow me on Twitter as well, StaciW_DC on Twitter. You follow Matt on Twitter as well. Are you posting about Algorand yet, Matt? Are you posting crazy financial tweets mostly? I don't know, but that's a good way to start. Our website is very good now as well. So you can go to blockchaindothat.com or algorand.co to get anything that you need to know. And we post our podcasts, and of course, come come see us on podcasts. Of course, we make all of that quite available.
Yes, indeed. And links are in the show notes, folks. All right, time to finish off the show. We're going to do that by running both of you, Matt and Staci, through the very famous crypto conversation hot take round. Are you up for it?
Okay, I don't know. Matt, are you up for it?
We'll see.
Okay.
Born ready, I reckon. All right, I'm just going to run some questions at you. We'll take it in turn. It's just a bit of fun. No right or wrong way to do it, but let's see what you have to say. Let's start with you.
To Matt.
Yeah, let's start with you, Matt. The first question, it's a bit of a funny one, but yeah. Where would you say, Matt, that you sit on the Bitcoin maximalist to multi-chain opportunist spectrum?
Give me a little background on that spectrum.
Well, I guess all I mean is, there's certain
Mercifully,
people.
He has not been around the Bitcoin maxis, I guess.
Maybe we should just start that question with you then, Staci, because you know what I mean, and I know you're going to have a hot take style answer. So let's do that one with you, Staci.
Yeah, I'm a multi-chain maximalist for sure, but I am a very pro Bitcoin person, but I'm not a Bitcoin maxi. I think that Bitcoin is the true idea of converting energy into money, and it's truly decentralized, and that's all it needs to do. It's good enough. I'm very pro Bitcoin, but I think to deliver on the promise of crypto, all the things that we can do with a blockchain, we need to be in a multi-chain world.
Yeah, very pragmatic, nuanced, and probably, that's the way forward, I think. Thank you, Staci. That was well said. Matt, let's go to you with the second question, which is very simply, what would you say is your firmest conviction crypto opinion?
Firmest conviction. Crypto, I mean, one of the things that got me into crypto is just, firmest conviction that it's going to revolutionize how we do traditional banking, right? So, I've got some traditional banking experience, so I don't know if that answers your question, but the idea is, my firmest conviction is absolutely this is going to change the way that just the average person interacts with their money.
Yeah, crypto will change the world. Look, it's as simple as that. I like it. All right, Staci, Bill Gates famously said that we tend to overestimate what we can accomplish in 2 years and underestimate what we can accomplish in 10. Now, as you know, 10 years in blockchain is a very long time indeed. But look, 10 years forward, anything you like here, Web3, Algorand, crypto, what does it all look like?
Okay, well, Algorand will be a top 10 chain, of course, in 10 years.
Yes.
But I think the problem with finance is that it's so interconnected that it is very hard to move first, because you can't move first and do all of your back office in a stablecoin kind of environment, right? Instant settlement environment, if everybody else is sending clearing messages back and forth. So I think Bill Gates's comment is particularly apt for crypto. So we are not seeing kind of the progress now because everybody's got to kind of like inch together a little bit. But in 10 years, I think clearing will be settlement. There won't be that kind of counterparty. Imagine being able to increase that turn on collateral, where you don't have to lock up collateral to do finance in the way that you do now. You don't have to pay intermediaries. You're not paying calculation agents anymore, right? Things are done with smart contracts and smart money. All of that will make finance much more efficient, and it's such a good idea for the financial sector that there's no way it's not going to happen.
I love it. I love it. Very well said. Matt, you've probably heard this quote. It's by sci-fi author William Gibson. He famously said that the future is already here. It's just not evenly distributed. With that in mind, can you think of an example of the future being here right now, but most people aren't aware of it?
Sure. I mean, the idea, absolutely. There's early adopters. There's people doing things that will eventually filter out into the rest. And so I start thinking in terms of being able to wrap real world assets, and some people are taking advantage of that. And eventually that's going to be how, again, the average person is going to interact with a lot of their assets is on the blockchain. Right.
Yeah.
So absolutely, this is something that is there, and it's going to filter out.
100%. Could not agree more. All right. It brings us nicely to the final question, which we'll get both of you to answer. Let's do you first, Staci. The final question is very simply, what is your favorite science fiction book, film, or TV show?
Okay. Of course, like everybody, I love Neuromancer and all of that, right? Like I know I love the ones that, but I'm going to go super old school.
Yes.
And it might actually be if I was forced to pick one, I'm going to say Roadside Picnic by the Strugatsky brothers.
Well, I'm not really, I can't say that I'm familiar with Roadside Picnic.
You don't know Roadside Picnic?
I don't know what that is.
It's so good. It's written in the 1970s by Arkady and who's the other Soviet science fiction brother team, the Strugatsky brothers. And it's a very good book. It's very philosophical. It really makes you think. Yeah, I highly recommend it.
Okay, fascinating. We're going to look that up at Roadside.
And I will tell you one other thing about it. The afterword is about the censorship of how they had what they wrote it and how they had to get it through censors and what they did to the book, what the Soviet censorship did to the book at the time. So the afterword is also very, very good. They're no longer alive now, the brothers, but
yeah, just ChatGPT tells me that the novel delves into themes such as the unintended consequences of technological advancement, the ethical dilemmas of exploiting unknown resources, and humanity's confused place in the universe. Fascinating indeed. Very sci-fi.
What more could you want from a science fiction book?
Couldn't agree more. Matt, let's go to you. What do you got?
Well, I don't know if I have prefaced this by saying I'm kind of a Tolkien fan, so that's why I'm reading a lot. But yeah, I like some of the classics in sci-fi, Clark, and but I can say one book I read recently that is a Revelation Space sort of series, and one thing I'll say about that is I like it very much for the technical accuracy. It was interesting.
Revelation Space. Andy, what's your favorite science fiction book?
Well, when people ask me this question, I did say, what did I say? Movie, book, or TV show. So my answer is always just the first Matrix film, because I think that was, extremely influential in, just kind of ideas around like simulation theory, that kind of stuff, which is very sci-fi and very crypto and very AI. So yeah, no, I'll just stick with the first Matrix film.
I could get myself in trouble by saying that I think the Netflix 3-body problem is better than the book.
Yeah. Oh, that's so. Yeah. Funnily enough,
those are fighting words, I know, but
I know they are, because when the 3-body problem in terms of the book, the famous Chinese trilogy, that was a very, very popular answer on this show to that question. So yeah, when the Netflix series came along, I was excited to watch the show because I haven't read the books, but yeah, I enjoyed the show. It's great stuff.
Yeah, show's great.
All right, let's close this out. Look, Matt, Staci, thank you so much for coming and spending some time with us today. It's been a pleasure talking to you, learning about the Algorand Foundation, and of course, the perhaps confused idea that TVL is an important metric when looking at an investment thesis for various crypto assets. So we've learned something today. As I say, listeners, links are in the show notes to all of these websites and resources and so on. Again, just close it out, please, Staci and Matt, by just, once again, shout out your various websites and social handles, etc. Go for gold.
Okay. Well, first of all, Andy, it's an absolute honor to be on your show. And thank you so much for what you do for crypto and the crypto ecosystem and bringing these messages to everybody. It's really... It's a quite a valuable service. But you can find us at algorand.co, and you can find me at StaciW_DC on Twitter.
Yeah. Second that. Thank you very much, Andy, for having us on. I'm going to post some results on X soon. So that's at MattBrigida2. And then I'm on GitHub at matt.brigida.
Awesome. Thank you so much, team. All the best, and bye for now.